Hi, this is Brien Lundin with Gold Newsletter, here with Rick Rule of Sprott Global at the New Orleans Investment Conference. Rick, you've been a long-time speaker at the New Orleans Conference. I guess we kind of use you and abuse you. We work you like a dog when you come here. Spend a lot of time on stage, spend a lot of time in your booth talking to the investors. But I don't know of anybody who has a better feel for the markets than you, and a better feel for the cyclic nature of the resource industry in particular. For years, you've told people at the top of the market to sell and at the bottom of the market to buy. We've been in the bottom of a market for a long time now. And you have to, you have to be like a kid in a candy store right now if your business philosophy, but is it, you getting too many sweets right now, or what's your view on where we are in the market cycle?
You know, Brian, it's difficult to say when the market's going to turn, but this is, depending on how you count, my fourth cycle or my fifth cycle. As you point out, I've been here a long time, and while I can't tell you when this market, and by this market, I'm talking about the junior resource stocks, the sub-billion-dollar resource stocks. What I can tell you is that 4 or 5 years from now, we're going to look back and say these were the good old days. These were the days that a newsletter writer or an investment manager or a conference promoter could expand his market share just by showing up because the competition is folding. This is the point in time where an investor could radically increase his or her wealth just by showing up. Certainly buying private placements if you had the means, but also at this level buying free trading stocks, provided that your security selection is good. We are living in the good old days right now. It just doesn't feel good.
Right. One of the things I tell people is at the bottom of the market, like this, it takes two things to build a fortune besides just showing up in an event like this. It takes cash and courage. Cash is surprisingly not the hardest of the two to find. It's really the courage to invest in these cycles, because we were saying similar things last year, and unfortunately, you know, we may be saying similar things next year, but it seems like we are bouncing around the bottom. We're not going down anymore.
You know, Brian, I remember the last cycle coming to the New Orleans Conference in 1998 and pounding the pulpit, as it were, about uranium. It turned out it didn't happen in '98. And you know what? It didn't happen in '99 either. And that didn't happen in 2000 either. And it didn't even happen in 2001. But it happened with such a vengeance in 2002 that the time almost didn't matter. I remember in the year 2000 having to write a piece to my own clients saying, is there a case for gold? The sentiment against gold was so bad in 2000 that I had to say there was a case, not the case. And gold then went on a run from $262 to $1,800. The similarities between now and then are striking. Strong dollar, strong general securities market, strong technology market, weak commodity prices. If you agree with the thesis that drives the general securities market, that we're in a Western world recovery, the resource business is going to go crazy, just like it did in the early part of the last decade. But people don't get it because they've been beaten up so badly in the last 3 years.
And the other side of the coin, if there isn't a recovery, then the central banks are going to resort to more quantitative easing, more money pumping, which will drive up gold, and there's the other side of the coin. So it seems that it'd be hard to lose in going forward, being at the bottom of the market, having so many forces apparently working for, if not the resource sector as a whole, but individual sectors.
I think that's right, and I think the other legacy of the New Orleans Conference is separate and apart from the increase in commodities prices. Over the years, the New Orleans Conference has nurtured the exploration sector. And what's important for investors to recognize is that even without an increase in commodities prices, if you out of nowhere make a big discovery, the market rewards you anywhere. Look at things like reservoir minerals. This is not a recommendation, by the way. Make a discovery in a terrible market and the stock goes from what, 40 cents to $6, settled out to 360. Africa oil, 80 cents to $12. This is a market that rewards discovery anyway.
Now, along the idea, the theme that there are specific sectors that will outperform or at least perform, even in these markets, what sectors of the resource market do you particularly like right now?
We've been attracted, as you know yourself, to the water sector for 20 years.
Right.
We've waited 2 decades to be overnight successes, but we're right there. We like the platinum and palladium sector an awful lot. It's a metal where the price has to go up, and it can go up, so it will go up. We are increasingly attracted to the oil and gas sector as it falls out of general favor. We like the uranium sector. But what's interesting to me is that about once every 2 decades, gold and silver stocks become reasonably priced, not cheap. They never get cheap. But gold and silver stocks are reasonably priced right now. And most investor portfolios, from my point of view, are way, way underweight gold and silver. We understand that the combination of precious metals and precious metal stocks occupies about 0.5% of most investment portfolios in the United States. We believe it should occupy 10%. Perhaps we're a bit aggressive, but if you think about the impact that it would have on gold and silver physical markets and gold and silver equity markets, if we went from 0.5% to 5%, that's a truly stunning number, and I believe it'll happen.
It's actually a level that's recommended by most portfolio strategists. Rick, thanks so much for your time today. Brilliance as usual. I look forward to your presentations here at the conference.
Well, thanks for your service to our community by putting on this conference for so many years. It's appreciated by all of us.
You're welcome. Thanks.